So hello everyone, it's great to having all of you in here. So today's sections we call is ETalk, Adventure to the Venture. This is a part of Vietnam Venture Capital Program powered by Wiziin. Simply to say, we are living in an era of entrepreneur and Vietnam startup ecosystem is rising, which produce several local success, as well as the venture deals continuously growing of on size. While there are many passionate and driven entrepreneurs, there are not as many supportive investors. So especially in this emerging market. So that's why we have started the Vietnam Venture Capital Program, which is extremely focused on value creations and high quality connections. So be a part of VVCP. Throughout this ETalk series, we will have an experienced VC partners from all over the world will share with us their key learning, investment insight, and real-world experience to showcase what is the practical viewpoint about the VC world. So for today's episode, we are honored to have Mr. Thong, who is the founder of Wiziin, and Christian, who is the founding partner of SDGx. So first of all, to starting today's section, we will listen to Chris to share about his venture fund, as well as what brought him to the impact investing industry as well. So very exciting to have you on board with us today, Christian. Thank you for your time again, and the stage is yours now. Thank you.
Thank you very much, Tom. Hello, everyone. Thank you for having me. I have a presentation prepared, but I think I'll just talk to you a little bit before I go into that. What brought me actually to venture capital, and particularly impact venture capital, was my time in Southeast Asia. I'm now in Berlin, but I used to live for 8 years in Bangkok and Singapore. And in that time worked a lot with large MNCs, particularly in Thailand actually, like PTT, the oil and gas company, but also manufacturers from Europe that would come here or would come to Thailand in that case and develop or produce their products. And what I was, particularly as a European, I guess, shocked at the very beginning was for once, the amount of trash that you were seeing everywhere. For instance, very small things like no trash cans on the street, but also like in general the pollution in the cities, right? And you see this, for instance, in Singapore every year when Indonesia is burning its as the burning season, then the PM in Singapore is through the roof. It's the same in Bangkok, and I assume it's mostly in the large cities across the region. And it's a really big problem. And there's not really, well, now it's 15 years that I came back, but there wasn't really a solution. At the same time, when I first came to Asia, there was, everybody already had Blackberries, and I still had my old small Sony phone that was not, I wasn't even able to chat, right, on Facebook or anything. And so the technology adoption in Southeast Asia is really amazing. The change is really amazing. And throughout the years, the growth as well in the middle class is really interesting. And so I went back into Europe, and I joined Google. That gave me even more exposure into the tech space. And then later on an energy company, because in Thailand I had consulted an innovation management department, in particular energy companies, and then became head of digital solutions for one of Germany's largest family businesses. The turnover around 2.5 billion. I was responsible for developing business models to, well, bring kind of this company, this very old-fashioned, more than 100-year-old manufacturing company into the future. And it was extremely frustrating, to be fair. At the same, because you have all the technologies actually available to stop climate change, to reduce pollution, but it cuts into the business model of large companies very often, right? An oil and gas company, it's called an oil and gas company because that's, well, I mean, it's the core business. And likewise with the energy company in Germany, they were selling oil heating devices mostly, and that's their cash cow. And so obviously they don't necessarily want to kill their strongest business by moving into something that is renewable and decentralized and so forth. And during my time in Asia, I'd worked actually also with the United Nations. I've met lots of people from Australia, from Singapore, and so forth. And I reached out to my friends and said, let's do something that can really change, particularly something in the ecological way, right? What can we do? And they came across impact investment, because my partner David, who was responsible for the United Nations Social Impact Funds back then, he developed a model to blend finance, where you would take public money and you blend it with private money to invest in all kinds of different projects. They did this for real estate, for instance, for affordable housing in India or in Pakistan, but they also did this more as a venture capital type of investment in Sri Lanka, right, for particular female entrepreneurship. And he left the UN at that time, and so we came together and said, okay, let's do this. Let's take the model that he had developed at the United Nations, and let's bring this into the private markets. Because at the end of the day, in particular around climate, that's probably the greatest challenge we will face in the next 30 years, 50 years. And it's particularly a problem of the global south. Here in Germany, obviously, we have technology available. We are a very orderly society, I would say, even during COVID. Everything is very structured. There's no left or right. Very often, the rules are in place. There's no way around that. In Southeast Asia and developing nations, that is oftentimes very difficult or very different. And I think what climate change has shown us is showing us right now is that we can actually only solve this problem together, because in the end of the day, it is a global problem. And so the responsibility right now is for, at least in my opinion, the countries that have been polluting the world mostly over the last 150 years or so, to make sure that we can stop this. But on the flip side, obviously, there is also the need for countries like Vietnam, for the population in Vietnam, to grow. Everybody wants to have a cushy life, and there's no way to no other way to go about this than provide it, if possible, right? Everybody should have enough food. Everybody should have a decent education. Everybody should have a good life at the end of the day, and so we need to enable this. I think the West has ruined the world. Now we have to fix it. But we can't do it alone, because if we don't enable developing countries to essentially get, or even leapfrog maybe, the Western countries, then the middle class and the population is so strong that we can't stop climate change. It's just a fact. But there is a massive opportunity to actually provide, for instance, technologies that will help particularly actually Southeast Asia and Africa to leapfrog Europe, because there's not as much infrastructure, there are not as much rules or as many rules, or as strict rules as we have in Europe. And so on this, we launched SDGx. We have a team in Australia, we have a team in Europe, and we have a team in Southeast Asia. And we work predominantly with universities, corporates, and of course, startups at relatively early stages. That means we invest on the one hand, and that's just one part actually of it, because investment alone is not going to change the world. It's an important part, but it's not going to change the world, fortunately. The second one is that we work with corporates to actually apply those technologies for them and help them to go this towards the sustainability approach. And we also work with universities because they can provide the research, they can provide the insights that we actually need. And we can make sure that it's a just transition. It's not just a transition that benefits a couple of people, but it has to benefit society at large. So in that sense, for instance, we work with Nanyang University in Singapore. They do due diligence on our technology investments, or if we are looking at investments. And they also provide us with insights into what's important in terms of sustainable city development and so forth. Just because they have, I mean, it's one of the largest research universities in Southeast Asia. We also do the same in Germany, where we work with organizations, and particularly research institutions, to identify good deal flow. And of course, we do that in Australia as well. And then we work directly with startups that we invest in, but also that we do not invest in. And it's, I think, very important. But where we can think we can add value. And then we become partially part of the team. We have local partners in Thailand. We have local partners in, of course, in Singapore, but also in Indonesia, for instance, or Wiziin in Vietnam, where if we have technologies or companies that want to get into or have a solution for a local problem, we can most likely supply it. And that is for the benefit of the SMEs in this country, because they get access to that technology that they usually don't have. And we can start pilots and we can develop local solutions and business models that then help essentially the economy, while also helping the planet and hopefully also the people that live in that region. So it's a three-party approach. Let me share my screen, because I think this will make it a little bit more clear. I hope you can see this, but I think you should. So essentially, we're a climate tech fund, and we focus obviously on climate, right? So that's our one big goal: stop or at least slow down climate change. Every investment we do has to be either carbon negative, or it has to be able to reduce carbon by 0.5 gigaton over our investment lifetime of 10 years. And I think venture capital is, in that sense, the best asset class to do this. Because when you go into, for instance, if you invest into developing countries, very often you have this through DFIs as well. And it's generally considered as a bit more risky, but venture capital is actually, that's the most risky thing you can do. It's super early stage. We invested 𝗘𝗧𝗹𝗃, so that's when a company has just finished the first pilot. So there's no revenue, there's not necessarily even a market fit. There's at best, there's interest and a pilot, but that's super early. So the team is super important. And hence, it's just generally very risky to do it. And climate is very risky to do because you have a very long investment horizon if you really want to make a dent sometimes. We also look at deep tech. So deep tech means for us, not necessarily only artificial intelligence, but generally solutions that come out of universities and that are patented, that are really revolutionary. And this is also why we try to bridge Europe, Australia, and Southeast Asia, because Europe and Australia in particular, they are, compared to the US, a little bit undervalued, so it's cheaper to invest. But at the same time, the research output is excellent. So we have lots of patents, and I will show you that on a map in a bit. So it makes a lot of sense to look at the European market, and it makes a lot of sense to look at the Australian market. The outlier in Southeast Asia, obviously, is Singapore, but in general, the amount of patents we have in Southeast Asia is unfortunately not as high. So it's a little bit more difficult to purely invest into Southeast Asia. And I should mention that even though I'm the only one actually in the fund who has not had any official venture capital experience, we are kind of an emerging fund. But at the same time, my partners, they come from fund management. We have a hedge fund manager in our team. She has run a $6 billion hedge fund. We have Elaine in my team. She is She's, I think, run 2 or 3 venture capital funds in Australia, around 400 million. Jeremy had venture capital fund. David did this United Nations social impact funds. So I'm really the only one. And we have a lot of venture partners in Europe in particular that also have fund management experience and also deep tech experience, so PhDs in chemistry and so forth. The goal for us, right, is not to only make money. And that's very important. When we invest, we have 2 criteria. One is financial and one is, does it create impact? And the impact at the same time is essentially split into what happens to the planet, what happens to the people, and what happens to collaboration and enabling development in Southeast Asia. Sustainable development in Southeast Asia. And we align ourselves with the Sustainable Development Goals because for all the faults they are for them, they are the one globally accepted guideline that we can follow. We don't look for anything that is making a small change. We want really, really big changes. That's why it's deep technology again. But we also think that impact investment, or at least traditional impact investment, very often looks at a level where we are more on a society level of change. With climate change, we have to look at changes in the Earth system. So we are looking at biodiversity and these kind of things. And that goes, at the end of the day, back to chemistry and physics. And so what the deep technologies provide is essentially, or they enable us to look at those kind of things and then scale for that and find market application. And as I already mentioned, right, it's global. So we have to work together to globally to achieve the Sustainable Development Goals, but we also have to work together globally for economic development. There's no way around that. I mean, we have seen this through COVID, but I'm sure each and every one of you has seen this here in Europe, for instance. There are just a lot of things that sometimes we don't have available anymore or had available anymore. And it's only because the supply chains globally broke down. And so we have to essentially all work together to achieve on a global scale change. That's just a couple of things on the fund. So we have lots of experience and track records, very experienced leadership team and so forth. And of course, we have proprietary deal flow. That's why we work with the universities. I mentioned this, and let me just get a little bit deeper into this because I think it's important. So Ventures essentially is our venture capital fund. We do, as I said, TRL6 investments. We start at 100K roundabout, but we can follow on with up to 1 million initially, and then later on, when the fund is fully capitalized, we want to be able to do up to 5 million. So it's kind of a Series A-ish investment. If you are in Europe and Australia, probably get a bit further if you are in Southeast Asia. But it's necessary because we are talking about deep tech. So very often after a company has developed their first prototype, they're looking to develop hardware at scale, for instance, right? And so those kind of projects easily go into millions. For instance, we have right now a company that we are looking at that is at TRL 4 or 5, so even a little bit earlier. They're already raising 4 million. And this is supplemented by a grant from Australia. And they are going their first facility, and that's just a prototyping facility to make sure they can actually get to TRL 6-7 is 1 million. They will not even be able to sell anything. So you can imagine how capital intensive that is. And yes, there are debt instruments and so forth. And of course, there are tax breaks on a lot of things. But at the end of the day, it's a high risk endeavor because we don't know if the solution is going to work. So that's why venture capital is extremely useful. And that's why the ticket size is sometimes or the ticket size required to play this game, particularly in our space, is sometimes rather big. The second thing we're working on, as I mentioned, is 𝗃𝗧𝗹𝗸. So that's basically helping the companies we invest in, but also other companies to internationalize, to technology transfer, work with corporate partners and so forth, so that there is actually an adoption and that we can bring them to early prototypes of early customers. And that sounds easy. It's actually much harder than investing, because corporates are very often slow. They don't necessarily want to change. There's not always the benefit. It's costly if they don't know if it's going to work. So that's the world of very often of a McKinsey or a Boston Consulting Group and so forth. So very tough, but extremely necessary. The last thing we do is a New Future Lab, and that's essentially working with universities around the world. They help us with due diligence, because physics and chemistry is particularly difficult sometimes to do due diligence on, and quite honestly, there's so many specificities and specialities and specific fields that we cannot do everything ourselves. But they do, and they can. They have the researcher, they have the experts, and so they help us. And at the same time, it allows us to actually create more comprehensive solutions for the world. And I mentioned this already, right? So we invest mostly in Europe, and we invest mostly in Australia. So that's around 70% of our investments. And that is because that's where the patents are. So I know this is rather small on the map, but you can see here the list, right? Germany with 455 patents. I think that's a couple of years ago now, but should be rather stable. And in Asia, you have, of course, you have China, but China is a very difficult game. And then you have Singapore and Korea. And so we keep out of China. We don't do China. That's because we don't have local presence, and it's very difficult for us to do this. But from Europe, also Israel, Australia, Singapore, and Southeast Asia, we can operate. And so it makes a lot of sense to be there. I mentioned this. I think all of you have seen this. Pathway to 1.5 degrees is very steep. Current trajectory is unfortunately still the trajectory. In Europe, I'm not sure if you've seen this, but Shell has been sued. They have to adopt a new climate policy. Exxon, I think, has been sued as well. And the governments are actively driving the European Green Deal in Europe, at least. I think Joe Biden is also, he's on it, let's put it like this. So the US is going to follow. But just as an example, the European Green Deal, it's a commitment by the European Union to become essentially CO2 neutral or get to net zero. And that means there's a lot of funding for this. That means all the initiatives they have in the innovation space are aligned to the Green Deal goal. It's so essential, or so core to the European Union now, that we will see a lot of deal flow from there just because of that. There is a societal agreement, essentially, that we should put all our efforts in that, and that makes it a very fertile ground for investments that are supplemented, of course, also by the European Union. So, for instance, yesterday I spoke with a company that is looking at identifying very early fires in forests. There's a massive problem globally. Usually how this works, how you look at a forest fire is literally you get on a high stand and then you look, and if the smoke comes out, then you know there's a fire, and then you deploy the fire department essentially to kill it. It's way too late, right? Because at that point, when you have this big cloud of dust already, then it's almost too late to actually extinguish the fire. And you're bound then to wind speeds and so forth. Now they can detect the fire just when it just starts with very specific sensors, and they have received, I think, 1.5 million grant funding from the European Union. And that's a massive de-risker. Otherwise, they would not be able to do this. So we took note of that, of course. And part of how we have structured the fund looks like this. I'll show you this. I'll jump a bit because I think it's quite interesting. So we have basically structured it like this. I said we are not a normal venture capital fund. We have a technical assistance facility. And this technical assistance facility makes up 20% of our total fund size once the fund is completely raised. And with that, we can provide grants. Now that's non-equity capital, obviously. So we can de-risk our own investments. But at the same time, we can make sure that this money, in terms of technical assistance that we provide, is used for things that we deem useful. So, for instance, we can say, go into Vietnam in a rural area, we pay for it. We know it takes you longer to develop the market there, but the societal benefit will be massive. So let's do that. Or, for instance, there are always RFPs out, right, where you can apply to, but the outcome is very, well, it's not always there. It's a proposal process, essentially. So not sure if you win it, but we can finance these kind of things. We can provide essentially the technical assistance to enable activities by startups in a stage where they would usually not be able to do that. And that's why we can go with those companies into Southeast Asia, because usually what a company in Europe would do is would go to the next country. Right? So if you are in Germany, the next thing you do is you go to Austria and to Switzerland and maybe to France or the Netherlands, because there's similarities in languages, there's essentially no border, it's one large market. And so it makes a lot of sense. But the impact at the end of the day is larger if you go right away into a developing nation. And that's what we want to enable that. And also, of course, opens us up to take more different kinds of investors. So for instance, if you're an institutional investor or even a company, right? So maybe you want to do something for your CSR and you want to invest. Or you can put the CSR grants into the technical assistance while you give more of your strategic money to the fund. And so you can guarantee that there is an alignment between strategy and the CSR. And that was, or at least I'm not aware of anyone in venture capital that is doing that. At least not the way we are actually proposing to do this. Maybe quickly to show also the alignment on impact. So we have, obviously we have hurdle rates and we get our carry based on financial returns, but equally on the social impact we create. So we are measuring how many greenhouse gases are actually reduced at the end of the day. What is about secondary effects? How much of society are we actually helping? Very simple, because it's almost standard in Europe, diversity, right? Is there female participation equal to male participation in the board or in the, right? So these kind of things come also into play. And we also actually give away 1% of the profits of the fund that we create to social initiatives, right? To support mental health, for instance, female entrepreneurship, microfinance, whatnot. Because we are an impact fund at the end, and we want to do good, and we want to be measured by that, and we need a very strong alignment ourselves to do this. Maybe very briefly, because also our investment process is a bit different. We utilize something called integral investment. It's looking at planet, people, profit, yes, but it's also looking at culture and morals of the collective, of the company. It's looking at behaviors, at the ethics, right, emotions, conscious bias, and so on. And we have translated that into something called the theta model and process, which is an adoption of, at least in the way we do this, of family office and that has been around in Germany for, I think, since the 80s, and they have only always done this for their family office. They have been working with the Club of Rome since the 70s, I think, and have seen some success with this, or quite some success. And there are a couple of research papers on this, and that's why we utilize this. Obviously, we adapt it to our needs. That's very important, and I think that's what's actually behind those shiny words that I've put there. Of course, it's a bit more complicated, but I think it gives you a general idea, right? So we look at the individual consciousness, we do the due diligence on that, collective gap analysis and reports. We look at the organizational structure and culture. Standard is, I guess, finance, legal, and I see I've not mentioned technology here, but that's kind of the backbone, which is very important. And then obviously we scan against ESG criteria, so nothing, no oil and gas, no warfare, these kind of things. If you're familiar, I mean, SDGs, you should probably know. The GIN is the Global Impact Investment Network. They have the IRIS Plus metrics. There's the project impact project. If you check that out, and there are criteria for impact management as well. But at the end of the day, it has to make sense equally for people, planet, and profit. And just to finish up, that's the 3 areas we invest in. It's energy, mobility, and production or manufacturing. And we take production rather widely. So for instance, there could also be things in there that address agriculture, for instance. And if you look at, it's deep tech, it's always deep tech. And if you look at deep tech solutions, they really impact all the SDGs. So that's where we align with. And that's why we do this, right? So if you look at the traditional commerce, advertising, and Alphabet is one of the, I think, still second or third largest, or best, or actually, yeah, I think third largest company in the world. But the really greenhouse gas emissions are in manufacturing, construction, transport, agriculture, and so forth. So this is where really the impact is, and where really the big industries are. And so that's where you have impact. And it's not necessarily in changing a community or helping a community succeed, but it's really transforming the big industries of this world. And that's what we're trying to do. And yeah, that's basically it on SDGx. So happy to get your questions.
Thank you, Chris. Thank you for sharing. Sorry, give me a second. Oops. All right, guys. Sorry, just give me a second here. Figure this out. All right. Hello, everybody. Thank you for taking your time. Thanks, Chris. Great sharing your adventure and the to the venture. Great hearing from you and SDGx and the good work you're doing for our globe in general. And picking up from where you left off, I want to zero in on the region, and specifically our country in Vietnam and the landscape of impact investment that we're making progress here. Let me share my screen. All right. So as you all know, Vietnam is quite fresh in terms of impact investment, and we've had a bad reputation of slow growth and impact for a while now. But in recent years, we're picking up pace, and we're catching up to our neighbors in the Southeast Asian region. Not much compared to Europe or Australia, but this is a promising sign. As you can see here, in the decade of 2007 to 2017, there are 10 active private impact investors in Vietnam, and they committed to 23 deals worth $25.8 million. And on the other side, there are 6 active development finance institutions. They committed to 50 deals worth $1.4 billion. but a lot has changed since then. So we move forward to the time period of 2018, 2019. And here we have a drop in number of PIIs. There's only 8 PIIs left in Vietnam, and only 9 deals committed. And the total worth is 7.7 million, which is this small compared to the previous time. And but DFI is still picking up pace, and they're on pace to overtake their past records. Still 6 DFIs, but they put in 11 deals and $800 million in the 2 years of 18 and 19. So you can see that the PII is withdrawing from the market, and it's a problem. I mean, because the ticket size for DFIs are really big. So most cases, they don't invest in early stage companies, and that leaves a huge gap in the market. So we move forward. Okay. So typical deal size in Vietnam right now, 30% of the deals are under 5 million, and 45% of the deals are over 25 million. That's the general deal size, but then the PIIs, the average deal size is only $770,000. I mean, I think this is great if SDGx could commit to our market, because your ticket size is perfect for our early stage companies. The sectors that the investors are most interested in are financial services, workforce development, energy, and ICT for the PIIs. And that constitutes about 60% of the deals. Whereas DFIs, they're more focused on financial services and manufacturing, which equates for over 50%. The instruments they use show a huge gap in between equity and debt. So 2/3 of the deals are debt investments, and only 30% is equity. From that, 50% of the equity deals are done by PIIs, and 80% of the debt deals are done by DFIs. So they're quite risk averse when it comes to investing in this market, and it's mostly debt. So the main concern of the public here in Vietnam are food safety, water pollution, and air pollution. And as you can see from the trend of the previous investments, these investments are inadequate to satisfy the needs of the people and the well-being of the people. So these key sectors are actually missing from the equation. And the gender lens investment. So as you know, the gender bias is big in everywhere actually, but it's particularly problematic in our region. And this is a good sign that it's growing. The gender lens investment is picking up, and for the last 2 years, actually from 17 to 19, $45 million were committed, and 7 deals were made. And the average deal size is $6.1 million. But this number is quite skewed, since there's one really big deal that's worth $40 million, and 6 smaller deals worth around 500,000 sorry, 500,000. So that's a big gap between the companies. But it's welcoming to see more women working in the more usually predominant by men, such as science, technology, engineering, and math. And the sectors that the GLIs were invested in are financial services and agriculture. Even though it's looking a bit better, it's still quite a social phenomenon that women are underserved and underrepresented in the industry. So a lot of stakeholders still voice their concerns about the lack of women-focused programs in Vietnam. So I'm going to zoom out a little bit and talk about our region in general. I mean, Chris, you should know this a lot better than me. I hope you chime in if you can help with this equation. So obviously, as you can see here, Vietnam still lags behind other Asian countries like Indonesia, Myanmar, Philippines, Singapore, and Thailand, but we're picking up pace. And in the period of 2017, 2019, we're actually improving a lot about key indicators like the low investors. I mean, the investors almost stay the same, but their capital committed is increasing. And the number of deals is actually looking good. So we're fourth in the numbers of deals. We have 36, and we lag behind Indonesia, Myanmar, and Philippines. In terms of the capital committed and deployed, we're third, actually behind Indonesia and just slightly below Thailand. So that's a welcoming sign. But the problem here is that the majority of deals in Vietnam are made to businesses that are in the growth or maturity stage. Whereas in Indonesia and Philippines, majority of deals are made in early and growth stage. This again shows a lot of risk aversions and hesitations from investors trying to enter the market. So what makes these problems? So we compiled 3 main issues with lack of investors and the lack of capital into impact in our region. The number 1 problem is the lacking pipeline for impact investments. The second issue is the lacking investments in early stage. And the third is lacking in gender lens investment, as you know. And that breaks down to a lot of smaller issues. So from a impact summit about 2 years ago, they surveyed over 100 stakeholders from the whole spectrum. So there was supply side, so like investors like you, demand side, the enterprises, and the enablers, banks, grants, foundations, and intermediaries. So they compiled a bigger list of micro issues that make up these 3 large macro issues. So these go as, so the enterprises in Vietnam are actually very small. And a lot of investors deem not worthy or they're not ready to be invested in. So they just pass on the opportunity. The founders, they lack a lot of skills of working with investors, hard and soft skills. So they don't know the preparation, they don't know how to pitch properly, language skills, and they don't know how to meet the demands of financial statements and such to actually be on the same page with investors. Again, gender bias comes as a large issue in this statement. And the businesses in Vietnam lack transparency when it comes to their operations and their financial statements. It's a common practice here that they have a tax set of financial statements and they have the internal set of financial statements. So, I mean, it happens in a lot of markets, but it's a really big issue for foreign investors, and they really shy away from this problem. On the investor side, a lot of investors lack the understanding of the local context and local presence. They don't have enough exposure into the market, and they don't have the time to follow up with. That's why I really like your Future Lab project. I think it's a great gateway into a market like this. There's a mismatch in the investment needs. So basically, the age-old question of profit versus impact. How do you balance that? And investors want a different thing, and SMEs, they really want a different thing. And finally, the enablers, such as accelerators or incubators, they're not well equipped to help these groups build the capacity to get out of the early stage. So some groups don't even get to the prototype stage, you know, and that's a shame because they have a good idea, but they don't have the capital to really move ahead with that idea. And it's a cultural context that founders here, they use their own savings or their family savings to build the businesses. And they shy away from loans and they don't want to give up the equity, which is a problem. So when that money runs out, they'll start scrambling and looking for funds. And by then the runway is too short and they just fall over. So it comes to how the policy is shaping up in our region. The policy has been made to help early stage, but not enough. So social enterprises here, they have tax incentives. The tax for corporate in Vietnam is gradually decreasing. but social enterprises have a special tax of 10% as opposed to the usual 20%. And they're actually exempt from tax paying 4 years after generating taxable profits. And the subsequent 5 years, they're actually only paying 50% of their taxable profits. And they have a preferential import and export taxes, which helps with operation. Sorry. So social enterprises have other benefits like they get waived the land registration fee if they have registered some land, or they get long-term leases with good rates. There are numerous programs aimed to improve the innovative SMEs, like the program 844, which has about $25 million, but it lacks the specific focus and support for impact groups. And the capital deployment for those groups of programs are actually quite small. The program's been around for 2-3 years, and only half of it is being dispersed. Finally, there are about 50,000 impact-related groups in Vietnam. And the infrastructure in place is quite simply, it's inadequate to support the ecosystem. And a lot of things are still done in a very traditional way and very slow. So it begs us to the solution. So Chris, I wanna pick your brains here. So from your side, as an international investor, how would you, okay, this is the part where we bounce ideas and see how we can help make this ecosystem a little more bearable and make an easier entryway for you to come in as an investor into this market. Because I mean, the deal size fits, the stage fits, and the mission fits. But we need a lot more investors such as SDGx in this market to actually make it flourish. And I believe we have the technical capabilities, but we're just lacking a lot of capital and infrastructure in place to make it fly. So what do you think?
Okay, the grand plan. Like, to be honest, maybe one thing on the social entrepreneurship and all that, because I have a very contrarian view on this. For me, every company, no matter what it does, should do good for the people, the planet, and for its profits. Like, it should satisfy. I mean, that should be the fundamental goal. So I'm always very hesitant to agree to the definition of social entrepreneurship and so forth, because I mean, I don't. Maybe it's a bit naive, but I don't really think that everyone started the company to hurt or do something bad. Like, I think that's not human nature. And I hope I'm not too naive, but that's how I operate, right? And if you then take that away, then you can look differently at companies, right? Because then every company becomes interesting, and you don't have the stigma of social entrepreneurship should do something good for the world and then maybe does less good for the investors. I think that's a big issue. We shouldn't have this discussion. We should just have the discussion: is the business model of this company working? Is it scalable? And can I make returns for people, planet, and profits? That's it. And I think that will solve a lot of other problems, because then, right, then every investor can look at essentially every company, and as long as it fits the mandate, we don't have to discuss this whole social thing, and then you can develop solutions around that. And then maybe there is an investor that has a strategy to look more into something that has more local applications, because he maybe has a small business there and he wants to, right, and he knows eventually, if I have a strategy to only invest in, let's say, in Ho Chi Minh, then I build my ecosystem and I utilize it. And actually, as a good example from Berlin, it's a company B10, and they have done exactly that. They said, we want to invest in scalable businesses, but we want to benefit first and foremost the city of Berlin. We want to strengthen the ecosystem here. We want that these are companies that have gender diversity and so forth. And they raised a fund for exactly 10 investments. They partnered up with local partners, local banks and so forth, and then they did that. And all those 10 companies are extremely successful because locally, even though they started locally, now they're going way beyond Berlin, but they are rooted in a very strong ecosystem. And that was only possible, through taking this impact approach almost, but also to root this into a strong community approach.
Mm-hmm.
I think that's something that's sometimes a bit overlooked, unfortunately.
Okay. So you think it comes down to the capability of the business, the scalability, impact?
For an investor, yes. I mean, obviously you have your strategy, right? And my strategy is a little bit different because, well, not a little bit, but probably a bit more different than others, because we look particularly at greenhouse gas emissions and measure all that. But I don't think everybody needs to do that. I think, like, at the end of the day, it's a couple of base principles that everybody should adhere to, and one is don't harm each other, and be transparent. Like, it's obviously it's funny if you say, or they have two financial statements, and for foreign investor that's a no-go, right? I mean, I'm sorry, but then I'm like, well, I understand this is local practice maybe, but how would I explain my LPs that, yeah, and this company has tools, and it's going to be difficult. But so that,
I mean, it's a lot better now. The practice is quite dying because companies are a lot more transparent these days, and they know the purpose of foreign investors now. So it's clearing up a bit, but you know, the old habit really stick on, and it gives us a bad stigma. But as a platform, we're trying to change that too, bit by bit. So we're trying to clean up all these things, be transparent, and give them a gateway to the world, actually. Because a lot of people have good ideas and they have good aspirations, good intentions, and really impact focused, but they don't have the basic trainings and the business know-how to move on with their ideas. So I mean, SDGx is I mean, I think it fits the market very well. And do you think that you know, impact funds, would they consider lowering their ticket size to penetrate a market?
I mean, you mentioned the DFIs, right? And you rightly said so, as like mostly manufacturing and so forth. I know they're looking at this. I think, and actually I had this discussion with the UNEP and so many organizations. The problem is kind of that you have, on the one hand, you have the impact investors that do more traditional things, and particularly DFIs, more manufacturing and larger tickets, because it's simply how they are structured and what's their mandate. They're just not made for it. I know they're looking at smaller things, but then on that end, you also have organizations like the UNEP or UNDP, Youth Development, right? And they give a lot of grants. So they, in a way, they are competing for the couple of startups that are there then on the lower end. And that's more about what UNDP does, and is more about capacity development. And what would actually need to happen is that you have, at least in my opinion, is that you have local investors that partner with these organizations like UNDP and so forth, and then do a blended finance model. Because the problem for UNDP is, or actually for a lot of NGOs that have capital to deploy, they deploy it, their mandate runs out, and they go home, right? So they can't do long-term follow-up. So if the business model is not right, there's no point. But for an investor, it's actually an opportunity. So if you partner with UNDP and you say, let's make sure that we help, like the UNDP provides the capital to upscale entrepreneurs to get a right business model, right? To understand all of those things. That's what the grants are for. And then you come in as a local investor who knows the ecosystem, who knows how to operate, and who can actually deal then also with two different accountings. Then you can build something, because they have the context, right? All those pain about growing a company then comes away and goes away. And I think that it's very difficult to engineer, because particularly smaller investors, right? They don't always know how to do it. Right? A large PE firm are not going to necessarily invest in 50K in a company at that stage anyway. But that's, I think, is opportunities, particularly for high net worth individuals that have companies that can actually benefit from these kind of things.
Well, that sounds okay. That's tough, right? So do you SDGx? Do you have any low interest loans or loans of any kind?
We don't do loans. We do equity and we do grants.
Okay.
But we partner, or let's put it like this: we try to partner because there's a problem. There's a problem how UNEP and those organizations allocate money, or the decision-making process that is around the least developed countries. So that's an issue for us. But we generally give grants for all the impact stuff and then equity investment.
Okay. So, and for instance, when you first penetrate a market, how do you get your pipeline?
I'm looking for partners all the time. So the way I reached out to you was because I think I need local partners, and you need people that understand really the market, and we've done the same in Belgium and in France, in the Netherlands, in Thailand, Indonesia, Singapore, anyways. And it's because we need to understand how locals operate, and we can't always provide that. And it's the same, right? Goes for if you bring a company to a country. Well, I don't speak Vietnamese. I can't do that. I think at the end of the day, right, you need the operating language locally for the culture.
Interesting. So apart from Indonesia, Thailand, and Singapore, are you looking into the next SEA country?
Yeah, actually, we are trying to build a partnership with in Cambodia as well. Essentially, all countries that have a high amount of NGOs and impact organizations provide early stage is interesting for us. So I just said briefly that there's this 30 least developed country scale, and we want to be in Southeast Asia across all of them at the end of the day. So we're looking at the Philippines as well. And so Malaysia is less important, to be honest. So is Thailand from that matter, because they fall in middle income countries already. And Singapore obviously is out, but Singapore is a good base.
So what's the outlook on the Asian market, do you think, in your fund life? Will it be a lot of impact compared to other regions?
To be honest, I think because of our mandate, we are most likely to invest most of our money in Europe and into Australia, and maybe 2 or 3 deals in Singapore. But what we want to do with these companies through our lifetime is to bring them into Southeast Asia, right? And then find joint venture partners to be able to scale them there and create jobs and so forth. And yes, we want to work with the local universities and identify technologies. And there's I saw actually 2, I think it was one of them was Vietnamese, I think, I forgot the name, but it's in my pipeline. There are from time to time companies that have really interesting local technologies developed. But it's and then you have to go through due diligence, and then it has to make sense. So I'm not saying I would love to invest more. Let's put it like this. But due to our mandate, it's sometimes very difficult because we're looking at high tech. Yeah.
What kind of technology are you looking at right now? What are you most interested in to actually bring you to a market?
Yeah, so I'm super interested in everything carbon sequestration. So that means how can you make sure that you can really measure how can you measure the soil or the amount of CO2 bound in the soil and sequestered, in a reliable way? And how can you bring this to smallholder farmers? That's super interesting, particularly for Southeast Asia. And what I'm also looking at is ocean like 𝗘𝗧𝗃𝗲𝗃𝗲, these kind of stuff, like fish farming, because it's a massive opportunity in terms of plastic replacements and so forth. So that's really cool. Yeah, Tien asked, in short, what's your key learning success in startup investment? Wow. I think you need to, even though it's a bit annoying, you need to have a good grasp for the founders and do a really good due diligence on them. Because if you have a standout founder team, it almost doesn't matter what they do. That's fortunately or unfortunately true. Like technology, yes, has to be excellent, and I can only invest in great technologies, but that reduce CO2. But at the end of the day, it's the founder team, and that trumps everything.
So we have a question from the audience that texted to our site. So what's it like to manage a fund, and what's your daily life like?
Oh, my daily life. So it's very coffee driven. Yeah, it's true. Actually, I get up, do a bit of sport, and then I read through my emails, check if usually in the evenings, the day before, I do my to-do lists, and then it's very often I just reply to startups that write me, right, and how I can actually help them. Try to make connections. I do read a lot of pitch decks every day. That's actually something maybe is interesting if you have an impact angle in your fund. You are attracting a lot of startups simply because of a different branding. It's not because we are maybe we are particularly cool. I hope we are, but it's mostly a branding thing actually. So that's really nice. But don't greenwash, please. So I look at a lot of pitch decks. I reach out to a lot of startups, like actively. I just want to understand what they do. I spend, I guess, 2 hours a day on LinkedIn, just looking at founder profiles and so forth. In the evenings, I have lots of meetings. I try to create relationships. I try to speak to startups if I can. But very often this is also in the mornings because I look at Australian companies as well. So that's screwing my day a bit. And so in the afternoons, I spend time with potential co-investors, local startups here in Germany, and I drink a lot of coffee along the way.
I'm also caffeine driven. So what's it like in Europe? As you said, it's one big market, right? So no boundaries, capital move freely. So what differences is there in partnerships in Europe are like?
Differences, I don't think there's so many differences. It's just the ease of how you can collaborate. It's relatively easy. And it's not as advanced as the US, right? So the US is always a little bit ahead. But the discussion, I share a lot of deal flow. I get a lot of deal flow from other investors too. That's really nice. And I'm not sure if that's because people think they can talk to me. I have no idea, but from my experience, we have very good discussions with my colleagues in different funds, and it's very open. And everybody's very eager to help. So that's really nice. I don't know. To be honest, I don't know about Southeast Asia. I don't have I have a couple of colleagues in VC that I know, but I also see the same behavior almost in Australia. So I don't think at the end of the day everybody's looking for deals and the opportunity to invest. So there's always an incentive.
I've had good experience as well with my colleagues and VCs and funds. We do share but I mean, culturally, we're a lot more different per country. But then, you know, the work ethics and our background, our education, it helps factor in those things. And we still share the information flow is great. And we work with groups from Taiwan, Singapore, no problem. But then sometimes it comes to the language barrier mostly. And we have a hard time understanding each other. But the deal flow is looking great here too.
I think like culturally, I mean, we have the issue or the opportunity maybe in Europe too, right? So the French are very different from the Germans. So are the Dutch, even though the language is very similar, and or the Italians for that matter. But I think we have the advantage that everybody speaks almost perfect English. That's certainly how.
Okay. So we have another question from the audience. So how will impact factor in the effect, the valuation of a startup?
I think right now it's probably not too much. I think in the long run, if we look down the next 5 years or so, I think it's going to be very important. And I can mostly speak from a European perspective here, of course. But the Green Deal and all these initiatives, all these requirements also, simply in ESG, that's the ESG taxonomy that's coming, or partially already implemented. This is going to make this even more important. And you have a very, positive and very also young people driven impact almost economy, you could say. And given that in the next 10, 15 years, the next batch of VCs will be around in the end 20s, early 30s, right? The next founders will transition into VC and so forth. I think we will see that it becomes more and more important. Also because we don't have a choice, to be honest.
So what's the right time for you to exit? So your fund is 10 years. So if you enter a company, what's your exit strategy?
Well, I mean, to be honest, I think most of the companies we're going to invest in, either IPO or trade sale, most likely trade sale. We are aiming to get an exit within that fund lifetime, of course, right? 7 years. But that being said, we try to invest in the first 3 years, 3.5 years. So that's the goal, and then follow on or exit. The plan is to have a second fund with a similar mandate, and that might be able then to follow on, because we know that the time horizon for some of our investments is very high. But it doesn't mean that they are not valuable. It's really just that it's just the nature of climate technology or deep technology.
So we have another question. What makes a good or bad startup ecosystem according to your experience?
A good or bad startup. So when I was in Thailand in 2010, there was a startup ecosystem at the very, very beginning. That was after the 2011 was the big flood in Thailand, and then there was not much, and then it started building, and there was a lot of buzz around that, but not much has happened, and I still think it's lacking. And a good startup ecosystem, even Berlin sometimes is lacking, but it needs governmental support at the beginning, because you need almost you need to give people the ability to create businesses almost without risk. They need to be able to, for almost free, take the jump into that. For instance, here, and that's what the city of Berlin is doing excellently. You can get a startup stipendium that's 2,000 euros a month for half a year. So just try it out. It's not a loan or anything. It's really cool. And then I think you need good local investors that want to do investments and that believe in their ecosystem and are willing to help and to take the next thing. And Berlin partially became so strong because of Rocket Internet. And I mean, everybody in Asia knows them because they had Lazada and so forth, right? And they really churned out, and then they gave back to the ecosystem. So founders need to give back to the ecosystem. It's and if you don't have this, and I think in Vietnam or in Southeast Asia, what you see is that there's a lot of American Vietnamese or Thai Americans and so forth, right? So education abroad, and then they come back. And these are the people that have the right education, potentially the right mindset, and I think they need to give back. It's about collaboration that makes a great startups ecosystem. So there needs to be a social investment almost from entrepreneurs into the ecosystem.
Thank you. Gabby, are you there? This is one very eager audience.
Yes,
Gabby,
yes.
would you like to introduce yourself and have a question for Christian?
Yeah, hi, I'm 𝗃𝗧𝗹𝗶𝗃 from India, Mumbai. We have an early startup and it's been only 3 to 4 months. So I just wanted to ask, what is the perfect method to evaluate a startup on the basis of pre-money valuation?
I don't think there is unfortunately, there is no perfect method.
Because the investor keep on asking what is the valuation you are looking for. So even we get confused and what valuation we should tell them.
Well, depends. Depends on how much revenue. If you have revenue, what you think is your market size. Do you have any traction? So those kind of things you have to look at. And I probably shouldn't say that, but then start a little bit higher because you will always be negotiated down anyway.
Okay.
Right?
There's no
perfect way to value because it's early, right? So if you think your market is large enough and if you have early traction or maybe even revenues, and you only have a prototype and you can prove that, then there's a good valuation possible. But it also depends on the market you are in.
Correct.
Right. So here in Germany, there is a serious seed investment can easily be 1 million, right? So and then the valuation has to be relatively high already, simply because otherwise the founders don't have anything and I don't know about the Indian market, to be honest. So
Indian market is a little tricky, when we speak to the investors. So it becomes a little difficult for us to how to crack the valuation thing.
Well, just suggest something that you think is fair, because at the end of the day, you always right. So it has to be fair to you. If it's not fair to you, why would you take the money, right? So that's how I usually would go about that. At least
Thank you so much. Thank you so much, Christian.
Thank you. Vung, are you there? You want to interact with the question yourself? It's quite a long question.
Hi, thank you so much for the webinar. I have the questions. My name is Ven. I'm the founder of 𝗃𝗧𝗹𝗶𝗃. So basically, our company is the tech-enabled platform that matches financial aid to students who want to seek for the degree in education in the foreign countries. So Vietnam is the top 5 in studying overseas number of students. So most of our students are self-funded students, but we also have a lot of students to win a scholarship like financial aid from the school and government to cover all of their fee. So basically we have $1 million scholarship value to our students from high school to PhD level. Therefore, we have a range of students who have no fund with low-income family background. Up to self-funded students mean they can have capability to study by themselves and by their finance. My question is, do you think that we match with the educations in the SDG with diverse student financial background? And secondly, do we match with the impact investing fund? Because we believe that by helping them changing their life through the advanced educations, make them grow up in their life and win the success in their life. Especially our candidates come from a lot of like government department, and after they come back, they make a good law and policy and affecting for the development of our whole country. Yeah, so I'm quite confused of the education sector in the SDG. Yeah, thank you so much.
Yeah, thank you for the question. It's a great question, actually. So in terms of SDGs, you fit to SDG 4, and education, and then that's, I think, something you have to keep in mind, is always secondary effects, right? So if you, and you alluded to that in a way, when they come back, then they can give back. And so better education means usually higher income, right? And then probably if there are females around, equally female distribution in that as well, then you have gender equality topics and so forth, and there's secondary impact essentially that you're creating, or catalytic impact. So yes, very much so does it fit. And I think actually if you talk to ADB Ventures, they would be super interested in talking to you, because that's pretty much what they do. And I could imagine they have to write fund size for you as well. So yes, it's also an impact topic. And there's also, because you're in Vietnam, there's also a way to probably get loans from UNCDF and so forth if you find the right program. So this is, I mean, it's probably the wrong word, but it's right on the money in terms of impact.
Yeah. So in short, do you mean that you mean IDP fund? Is it mentioned? Can you please write it down for me?
It's the Asian Development Bank.
The ADP.
ADB, Asian Development Bank.
Okay. And the second names you mentioned, I couldn't hear in the second name.
UNCDF.
Okay. Yeah, UNCDF. Okay.
But actually, you should also maybe ask them. So just a couple, because he's Peng is I think the fund manager, or actually the partner. He is also in Indonesia an education NGO that he has funded and started. And it's similar. They focus on language skills through apps. So it's earlier, but also for people that usually do not have the chance to get higher education, or any education for that matter. So 𝗃𝗃 might be interested in that too.
Yeah, great. Thank you so much.
You're welcome.
𝗃𝗃 actually has a presence in Vietnam right now, so it's probably easy to reach out. So
𝗃𝗃 also has a fund-of-fund investment from Germany.
Tien has a follow-up question. Do you want to put a question to Christian, Tien?
Yeah, go ahead, please.
Right. So, yes, he's not here. So what's a key factor that has impacted your fund's decision into investment in the early stage areas? Early stage startups should focus on preparing one funding?
It has 50%. Well, not 50%, that's not true. It's equal to all the other decisions. So I don't back down on impact. Actually, yesterday morning, we have had a discussion on the company. It's a battery company. And we have done the impact analysis, and it's a borderline case, and I said no. Right, and we have, I think, discussed this now for 3 weeks almost. So we are at a standstill in the IC because I keep saying no because of the impact. And it breaks my heart because financially it's really a really good company, I think, but it doesn't create the impact. And so for me, it doesn't justify the follow-on investments, and hence I will not be able to generate my carry, so no point.
Okay. Any more questions, ladies and gents? Okay, so I guess
this is Vân again. If there's no questions, I would like you to come back to the slide of our fee, our impact and perform align. And can you please briefly explain again the chart?
Let me see. Impact incentives.
Yes, the X and the Y, vertical and horizontal one.
Yeah, if my screen loads, then I can do that.
So my questions would be like, why, can you explain of the 25% on the top and the right corner, and what does it mean by 𝗘𝗧𝗹𝗸 here? 10% in the first upper left and 10% in the down right, yeah.
So essentially, you can see here, right, financial returns and social impact returns. So we have to get to certain returns essentially before we get any carry. I think that's clear. If we don't perform on the social scale, so if we do not, if we do not invest in companies that can actually, or not enough companies that can reduce 0.5 gigaton of CO2 emissions, we are not going to get the full carry. That's just it. Like, we might get some carry if they are financially performing, but if we do not get to the full impact, we do not get the full carry, and the 25% is really should be completely outperform both on the social impact and financial return. Then we really get an excessive amount of carry if you want, but then again 1% goes into that. And there's a paper on that from I think Harvard University, and that explains how to calculate that in detail. So if you look at venture capital, or just Google for Harvard Business Review, venture capital and social impact returns and hurdle rates, then you will find that.
Return of Harvard paper?
Say again? Sorry?
Is it the Harvard, you mentioned that, is it the Harvard paper? Is the Harvard publication?
I think it's from Harvard Business School.
Harvard Business, yeah, okay. And is it like a common method for all of the impact investing fund?
No.
No?
It's from as a friend of mine, she ran a venture capital firm in Brazil, the first one in Brazil, and they developed this model, and it worked for them very well. And they focus on education though, but nonetheless. And we took this approach because we think it's a very good alignment for what we do with impact.
Yeah, thank you so much. And my final question: do you think that education is a good sector for investing and for getting a high growth rate in the developing countries like our country, Vietnam?
Yes, I think so. I think there's generally education is, from an impact perspective, extremely important, because the more education you have, the better innovation you will drive, and the better companies will come out at the very end, and then economically the country will strive as well. From a purely venture capital focus, I would say it depends. And that's because if you, for instance, if you sell into governmental institutions, that can be very difficult. I know Vietnam has, like a lot of countries in Southeast Asia, a very high market in private education, right? And you have 𝗃𝗃𝗃𝗃, for instance, is a massive company. And that has shown, right, with private schools and so forth, and they are really money makers. So that's a good investment from that perspective. And so I think as long as you focus on private schooling or like not directly working with governmental institutions, then it can also be an extremely good investment for venture capital. Yeah.
Thank you, Christian. So we have a last question from Jem. Jem, would you like to ask a question? We're running out of time, so Jem, please take the stage.
Oh, hello. Because you have been mentioned about a startup, and when you evaluate a startup, you would look at their great impact, what they contribute to the society. So I want to know, in terms of the national scale in Vietnam, how you think a startup should be, how they can measure the impact? Would you look at how they liquidify that impact in terms of transferring that into figure, into set of money? or you just looking at the changes that are gonna make in the next 3 years gonna make on a certain sector? That's my questions. If I make it clear enough.
Yeah, I think I know where you're coming from. So as always, the answer, it depends. Depends on the sector, it depends on so many factors. And we don't do, I would say we don't do a blanket check and say, okay, this is the one thing. So we have a staged approach for ourselves because we focus on climate. So our number one criteria is greenhouse gas emissions. Right, so that's the one thing, and then there's carbon intensity and so forth in comparison to the industry this company operates in. But that's not where we stop. So we do something that's called the theory of change. Are you familiar with that?
Yeah.
Okay, so we map the whole theory of change and make the logic model, right? And within that, then we define the different potentials in terms of outcome, outputs, and also then the long-term impact. And very often the long-term impact, at least in our case, right, is beyond the fund lifetime. Like we can't help it. We can measure the progress towards it, but it's beyond our fund lifetime. It's simply because we invest early stage, it's climate, and to actually get to the point that they have 0.5 gigaton, it's going to take probably around 10 years anyway. So if you invest in year 3, it's very likely that we will be too late in a way. But I think you can apply the general model. And then there's this model of double materiality that we are also pushing, right? So materiality assessment, double materiality assessments, to look into, okay, what's the impact on the partners with the internal stuff. We also look at scope 1, 2, 3 in terms of emissions, of course. And that's from our perspective, because we focus on climate, what we can do.
Understood. Thank you for your answer.
Pleasure.
All right, I would like to thank Christian for your time today. We have a good time, and we glimpsed into your career path, your personal experiences, and thank you for sharing that, as well as learning about the SDGx, your fund, the models, the DD process, your mission, your mandate, and I hope that you stay safe and keep doing good for this world, and much appreciated. We hope that